Is this the dumbest stock market in history? Inflation is out of control and causing people to go back to work, and most boomers and Gen Xers are terrified about running out of money in retirement. All that and more on today's episode of Elevate Your Wealth.
And now, Elevate Your Wealth with Mark Stimpson and Casey Elkins.
Welcome into Elevate Your Wealth. Your hosts are Mark Stimpson, Casey Elkins, and Steve O'Flynn. You can find them right here in Seattle. Elevated Financial Management, over 42 years combined experience between these three. And again, certified financial fiduciaries. It's all about getting you ready for your retirement. Want to tell you real quickly, there is a resource website. It's EFMNW, all letters.com, EFMNW.com. Links to the TV show, radio show, and podcast form. I'm Morgan Patrick. A pleasure to jump on with the gentleman and talk retirement, the importance of being proactive as opposed to reactive when it comes to your planning. And as we always do, let's start the show off. Mark, you're first. How was the week?
It was good. Everything's, happening big time in the office now. We have a brand new advisor that we're so excited to have on board. Craig is with us now, and he's good buddies with Steve. He basically came from the old office together. So, and we got a little team here playing a little baseball in Seattle. I think everybody knows what I'm talking about there, but the Mariners, they are playing ball right now. And, we got football happening. So this is a great time of year for me. I love the fall because I love sports. We have a sports themed office, our conference room. We have one that's Mariner based, one that's Seahawk based, and we definitely are bringing back our Sonics at some point here. Of course, we've been saying that for almost 20 years now, but it's going to happen pretty soon.
Be positive. Be positive.
Yeah, that's right. So, yeah, it's been fun. And so we're just really having a nice time helping clients get their retirement set up. And it's been really, really positive over the last few weeks. We had some interesting cases. And so we're excited to talk to everybody on today's show.
All right. Well, Casey, you're up next.
Yeah, similar sentiments, right? We're really excited to have new members joining the team, Craig being the newest member there, and he'll be welcome to the show soon enough. But no, it's been great, and really all of that comes from this is a great opportunity for us to say thanks, right?
Yeah.
Realistically, we see the business growing. We're looking at expanding not only our office in Renton, but also expanding to other locations in the future. And as we continue to do that, realistically, we owe a tremendous thank you to all the families that we get to help. We really do. We work really, really hard to be able to help those folks, and they place a tremendous amount of trust in us and in our company and how we do things. And so we want to say thank you to our listeners, to the people that are clients, to even those that listen and have yet to reach out to us for some kind of help, because eventually when the time is right, we'll be here when they need us.
Yeah.
And everything that we do comes back to education. It truly does, right? I mean, we teach at the local colleges. We're looking at adding additional colleges to that roster of schools that we teach at. We have the radio show. We have the TV show. We've been on New Day Northwest. We're on King 5, these different places. And all of that comes back to trying to make it accessible, because the financial world has done this crazy thing where they've intimidated everybody out of having conversations about their finances. And we think that is the wrong thing to create success in your retirement. And so that's what we do each and every week here, is to try and make it okay to talk about it, and make it okay to people make mistakes. People didn't save like they should have, or started late, or they invested in the wrong thing. That is okay, right? It's about where you're going, not where you've been. And so this is really what this is all about, to try and help people as much as we can.
I want to add just one more thing. Casey and I, this year, we really are thinking about those that maybe are widows, single women. Maybe you've gone through a divorce and you're needing help and you're needing ideas. We just want all the women out there that are wondering, well, who can I talk to? Well, we're a firm that we really believe. Give us a call, because we want to help.
Yeah, it's about education, empowerment. You don't know what you don't know. We talk about it each and every week. Steve, what about you? How was your week?
Yeah, great week again. We were at the college. We were in Bellevue actually this week, and we gave a workshop, and it was great to meet some folks, and they brought some really good questions to the table. So one of the things you might want to do is go online to our website and look at the events and see which colleges are coming up and what time those classes are, and it'd be good to meet some of our listeners.
Absolutely. Again, that website, efmnw.com. Check it out, efmnw.com. All right, gentlemen, the article's in front of us. The one we're going to look at first, dumbest stock market in history. Is this the dumbest stock market in history? Why did this jump out at you? A lot of people are focused on the market because it just seemingly just keeps going up.
It does, yeah, and that's really why it stood out to us, right? I mean, it's wild what's going on with the market, and you know what? It's been great in a lot of ways, but the old saying is true, right? It's all great until it's not, and we're worried that that's potentially something that's coming. We don't know when, but the market historically has corrections, right? I mean, that's to be expected. If you meet anybody that tells you that that's not going to happen at some point, then they either don't know what they're talking about or they've got something to sell you. So the idea here really is that it comes back to making sure that you can be successful in your retirement despite what's happening in the market. That's really the key. If your success in retirement is solely founded on how the market does, you're really not setting yourself up for success. And so the market is very extended. It's been very volatile, but it's been good. Is it going to continue that way? We don't know. There's a couple quotes in this that I think really stand out to us. First one, and this is a quote from the article. It says, "This dumb stock market is built entirely on blind faith, and it wouldn't matter so much if the numbers passed a sanity test, but they don't." And so what that really means is they're talking about PE ratios, like and essentially how extended those holdings are, or those valuations are of the companies. And so are those valuations truly founded on fundamentals of the company? And I think this is the big thing in my mind that maybe a lot of people don't realize. The stock market on a day-to-day basis does not necessarily trade based on the value of a company. It's based on supply and demand. And so if you have a tremendous amount of buyers in the market, that pushes prices up. And then what happens? Well, the price goes up and people go, oh man, I need to buy that. Mm-hmm. And now we have more buyers. And then you have other people going, oh man, I'm missing out. My buddy at work said he just made a bunch of money on company A. I better buy into it too. And it continues until it starts to stop and it slows down. And then when the sellers come in, we can have that same impact where we have this massive slide because you have a bunch of people selling. So it's not that none of it is founded on earnings calls and those things, but day to day, that is how the stock market moves. It's based on investor sentiment. And if you haven't taken the time to analyze how you're invested and how things are structured, that really does give you a tremendous amount of exposure. And, you know, I think when it comes down to it, the S&P 500, really interesting article, over 40% of the S&P 500 is made up by 10 companies, right? Wow. S&P 500 is 500 different companies in that index, but over 40% of the S&P 500's value as an index is founded in 10 companies. It's 11 different stocks, but it's 10 different companies because Google has 2 different class shares listed. And so that means that if you're holding an S&P 500 fund, you're probably less diverse than you think you are.
Good point.
Right? Because you got 40% made up in just 10 companies. And realistically, those 10 companies are probably on the higher risk side of that entire 500 group of holdings. So it's something that we really have to account for and we have to plan for.
Yeah, I was just thinking there's a very powerful statement made in this article. It says, passive investing now dominates the allocation of investment capital. Well, passive means we just buy something, right, and then we don't really look at it. We just hold it. And that is dangerous right now, right? Because if you're not rebalancing, looking at these stocks and how you're invested, this can backfire tremendously, especially if you're in what we call the retirement red zone, right? Within 5 years of retirement, and if this market, we talk about sequence of return risk all the time in our classes, right? And if you're not aware of how powerful and how important understanding that is, your retirement can be devastated if this market has a pullback, a big downturn like what we know is coming.
Right. And, you know, here's one other quote from the article that I think really sums it up in a lot of ways. It says that essentially fewer and fewer people are buying stocks using their brains. Most as indexers are just blindly buying, assuming that somebody else is minding the store. And I think that really is the case, you know, and we've had folks come in that have done really well in the market, and that's great, right? We want that for them. We want our clients to do well in the market. And, you know, sometimes we'll hear, well, you know, I've had some great picks and things like that. If you haven't done well in the last 10 years, 12 years, I really question the type of advice that you're getting, because a rising tide floats all ships. So most everybody has done really well, right?
I was going to
rightfully
say,
so.
we've been fishing in a stock pond for 15 years almost.
Exactly, right? It's like fishing with dynamite, right? So, it's amazing what's happened. But again, as you move into retirement, that's the concern. And so if you've been listening to our show for a while, you're worried about how you're invested, or maybe here's the deal. Maybe you're not even worried about how you're invested. Maybe you just don't know, because you see the fund names in your 401k and you don't really know what that means, and you'd like to find out what it means, and you'd like to find out what your path to retirement looks like, and how your investments are performing, and the expenses that you're paying, and when you should start Social Security. All those kinds of things are included in our analysis that we will sit down and custom tailor just for you. So this is your opportunity to get that, to have that conversation based on what you're looking for in your retirement, and have something built just for you so you can create the success you need. So don't hesitate. Pick up the phone and give us a call. Morgan will give you the phone number now.
All right, here it is, 866-668-3625. That's 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. And again, we have 10 appointments available this week. Top 10, you're in. First 10, you're in. If you're outside the top 10, short wait list, they'll get to you in the next couple of weeks. 866-668-3625. We've got more coming up next. Inflation was out of control in retirement, so I went back to work. And I'm still working at 66. Was I correct? That's the next article coming up next. We are back on Elevate Your Wealth. Your hosts are Mark Stimpson and Casey Elkins, along with Steve Flynn. Elevated Financial Management, where you can find us right here in Seattle. I'm Morgan Patrick. A pleasure to jump on and talk retirement. Between the three of them, over 42 years combined experience. Again, certified financial fiduciary. It's all about helping you plan for, get ready for the big retirement, the big day, and beyond. Resource website, I say it all the time. Check it out. All letters, EFMNW.com. That's EFMNW.com. Links to the TV show, radio show there in podcast form. Great information on planning, background information on the team, so you can really kick the tires there. EFMNW.com. All right, gentlemen, next article for discussion. Inflation was out of control in retirement, so I went back to work. I'm still working at 66. Was I correct? We're assuming that 65 may have been their target date. They're a year into this. What jumped out at you about this article? Because I think a lot of people are in this boat, guys. They think they're ready for retirement, feel like they need to work a little bit longer.
Yeah, this article, if you're listening, I hope you really pay attention to this segment, because this is something that we are concerned about. I love a couple of the things being said here. One of the lead quotes was, "Be more concerned with outliving inflation than Social Security."
Yeah.
Right. Some people, we hear this in our classes. They're taking Social Security early, a lot of times at 62. That, for a lot of the students that we talk with, the retirees and the pre-retirees, that is a mistake that a lot of people are making today. So there's, when we go back and forth on Social Security, as most listeners know, we teach a class on this, but you need to be concerned about inflation. And one of the things that was amazing to me in this article was this gentleman. He's 66 now. He's back working full time. He did retire 5 years prior at age 61. Mm-hmm. But then in 2020, listen to this, what he was earning. He had a $3,000 a month pension. The bulk of his health care was paid for as part of his pension benefits. And then, he owned his home outright. And, he had a home that was worth about $700,000, no debt, no car loan, no credit card. And I was fine, he said, but within a year, my money didn't go so far. So this is an unbelievable story for all the listeners. I think some of you are probably thinking the exact same thing. My money is not going like it used to. I know we all feel it, especially in Washington. You go to the gas station, right? And $4.50 to $5 a gallon. Lunch, which you could buy a really good lunch for $10, is now $20 or $25 for the same thing. So all of us are feeling inflation, and that's the key. Do you have a plan that's going to incorporate a way to deal with inflation? Because if we don't, we're all going to be depressed. I think Steve's got something he'd like to add.
And we do talk about it in the workshops that we do. The two biggest eroders of money and ultimately somebody's retirement is taxes and inflation. So we really want to plan for the power of money. And what did we say in the class? If inflation rises on average about 4% every 18 years, you need twice as much money to live at the same standard.
Yeah, that's a really good point, Steve. So just to put that in a little further context, if you have $50,000 a year worth of income as you're moving into retirement, and we have 4% inflation over the course of your retirement, your income needs to go from $50,000 to $100,000 in 18 years, right? Now, people are having 30, 40-year retirements. That means that their income needs to double twice during that time frame. Yeah. And here's the key. If you don't have that set up, then you have a plan to cut your lifestyle by 50% over the course of your retirement, and to do that twice, right? So I think that's really our big takeaway from this article that we see, is that inflation is difficult, and it's something that we need to plan for. Sure. It's great that Social Security has a cost of living adjustment, but your other sources of income may not. A lot of pensions don't, right? Income from your investments. Well, in theory, you can take more out as long as the market's growing, but what if the market has a correction like we just talked about? Then how do you take more out of your accounts? How do you even take the same amount out of your accounts, right? So this is where that plan comes in that we're always talking about, that's so important, because these type of things, like I think of this individual, and as the article goes on, we won't go into every detail here, but as the article goes on, it actually worked out really well for them to go back to work. And they didn't sound bitter about it, right? They actually sounded okay about it. It was their decision. And they ended up having $10,000 a month in their retirement. That's fantastic, right? They were able to, I think, double their pension is what it said in the additional years that they worked, and save a bunch of money in a Roth. So they were really able to kind of start with a fresh slate and really set themselves up well. But I also think about folks that we've had that come in that actually retired in their 50s and are on a tremendous path to retirement because they had saved enough and they had worked really hard, and with the right type of planning, it's doable. That's the key here. So I wonder about the plan that this individual had, right? Maybe they didn't really have a plan. Maybe they just kind of went off half-cocked and retired before they should have. And I think that's really the issue, right, is that plan is what gives you the ability to do it and see if it's going to work.
Yeah, there's a really critical point here that he admitted that he applied for Social Security at 62, but he was within his 1 year window. He withdrew
so he stopped
that.
it.
He stopped it. And what a difference that made. Some people, or a lot of people, we come in the office or we at our classes, they're admitting that they had taken it at 62. Now, if you get 1 day past your 12-month window, we can't fix it. But he realized that was a mistake, and that's what we want our listeners to be thinking about. Don't make an emotional decision, especially with one of your main pillars, which is Social Security, and go early because you believe it's just not going to be there or it's going to go away, because we know deep down that's probably going to be a huge mistake.
And we had that gentleman that came in the office that claimed at 62 he was within that 12-month window. So we were able to help him withdraw that application. But the other factor that he was still working. He was still earning good money. So it didn't make sense.
He made a big mistake realistically, right? And didn't realize it. Right. But that earned income test on his Social Security was going to be a serious problem for him. And so thankfully he was able to change it.
Yeah, we talk about it all the time. I mean, retirement, it's a living, breathing thing. Your plan needs to be able to adjust. Working with professionals, with fiduciaries, where you revisit, you rebalance if you need to. That's the peace of mind we talk about so often. And here on the program, we do open up the appointments during the course of the show, but we also have the book, Break the Glass. You can go to breaktheglassbook.com. That's breaktheglassbook.com. And you can enter your information. They're going to ship this book out to you. Casey, real quickly, just give us a synopsis what this book is going to mean when it shows up in their mailbox.
We're really excited to be able to offer this to everybody because we wrote it specifically with the intent of our listeners, our students at the colleges in mind. It's not meant to be a textbook to train you to be a financial advisor. That's what a lot of these retirement books almost feel like, right?
Yeah.
Like you have to learn how to do it yourself. And I don't think that's really what most people are looking for. They want to understand and feel empowered to make a good decision so that they can make the right decisions as they move towards retirement. And that's really the purpose of Break the Glass, is to give information on Social Security, on market risk, how inflation is going to affect things, taxes. Essentially, really what it is how we plan put all together in a book. And it's meant for people to read it and understand what that plan should look like, so that, again, you have the confidence to make that change or to make adjustments to set yourself up properly. So, again, it's breaktheglassbook.com. We're happy to send you a copy of the book. And it'll come with some other information as well. But don't hesitate. Take the opportunity, breaktheglassbook.com.
Yeah, I mean, it's an opportunity for you to kind of dip your toe into the planning pool if you haven't already started, or maybe you're in the middle of something, and this could be an eye-opening experience for you. It's okay to go get a second opinion. We're going to open up those appointments. But if you want a copy of the book, again, it's complimentary. They're going to send it out to you. Just go to breaktheglassbook.com. Sign up there. They'll ship that book out to you. And then if you have any questions, obviously get in touch with Elevated Financial Management. Come in and talk about your retirement situation. And again, it's important to have a plan. And we know the numbers. We know the numbers. So many of you are sitting on portfolios and you're just thinking, okay, I'm going to start withdrawing when I get to retirement. But how much gas do you have in your retirement tank? You don't know. So make sure you have a plan. Well, Mark, we're up against it. What we're going to do is we are going to open up the phone lines right now. We have 10 appointments. We call it our top 10. So here's how it works. First 10 in each week, your appointment is this week, all right? Outside of that, it is a short wait list, and they will get to you, but it'll probably take a couple of weeks. So get in now, 10 appointments, but here's the information. Mark, what's going to happen if they grab one of these appointments?
Yeah, so if you've saved $250,000 or more, this type of planning is going to work best for you. So please, we just talked about the importance of understanding inflation and how devastating that can be without a plan. We also want to make sure that your income is set so you know exactly where it's going to be coming from each and every month. We also are going to spend a lot of time on taxes. We have another free calculator that we can talk about there, taxbillseattle.com. So again, if you've got questions about your retirement, you're worried about this at all, please pick up the phone, give us a call. Let our team of financial planners put together a plan specifically based on your situation. So please reach out to Elevated Financial Management, and we'll get you on our calendar.
All right, here's the appointment number to call, 866-668-3625. That number again, 866-668-3625. 10 complimentary appointments, no obligation, meaning if you grab one, you're not agreeing to become a client. This is a great way to test drive Elevated Financial Management, see if you're on track for your retirement. 866-668-3625. We're here to help. 866-668-3625. When we return on Elevate Your Wealth, most boomers and Gen Xers are terrified about running out of money in retirement, even if they're already retired. We'll talk about it next. Elevate Your Wealth. Your hosts are Mark Stimpson, Casey Elkins, and Steve O'Flynn. You can find them right here in Seattle at Elevated Financial Management. Again, they've got well over 42 years of combined experience in this retirement planning business. And it's all about being proactive, not reactive. They're certified financial fiduciaries. I'm Morgan Patrick. A pleasure to jump on with the gentlemen and talk about just some of the pitfalls that are out there. Also, things you need to be aware of. And also point out some facts, like a lot of you aren't planning. You're saving well, but you're not planning. So let's make sure we're doing that. Now, the opportunity to get on their calendar is coming up, so stay tuned for that. We'll also give you an opportunity to grab one of their books, Break the Glass. That's coming up as well. So this next article, guys, most boomers and Gen Xers terrified about running out of money in retirement, even if they're already in retirement. This is one of our big discussion points every week, Case.
It is, yeah, because you know what? Every study, every Harris poll, Gallup poll, whatever it is, every single one comes back to this being the number one concern that retirees have. And so we keep talking about it because it's only a plan that allows you to overcome this fear, right? And so running out of funds, you know what? The reality is too, that's our biggest fear for clients too,
Sure.
right? I mean, we failed at our job if that happens for somebody. So it's our biggest concern as well. And so we want to make sure that that money lasts. And it comes from a couple different ways. It comes from making sure you have a plan that is accurate and accounts for inflation and taxes. It also comes from making sure that your income is set up in such a way that it is factoring for income and tax, right? That income piece is so important. It needs to be increasing over time. We need to be pulling those taxes out and looking at the net numbers. And then it also comes back to how you're invested, right? Because if we're worried about running out of money in retirement, what we're really saying is I'm worried about running out of income in retirement because that's why you save the money. And if our investments are set up in such a way that we could lose a big chunk to a market correction, that's its own problem, right? So there's a lot of factors at play here, but I think the biggest thing is if you're worried about that, you're not going to have a successful retirement. It's not going to be enjoyable, right? No. I mean, if you're already in retirement, like the article's bringing out, maybe you've got a couple $1 million. That's great. But if you don't know how to spend it and you don't know how to make it last, that's a stressful retirement. Even though you might have the money to make it work, it still doesn't feel good, right? And these are supposed to be times where you're not worried about the money anymore. That's the whole purpose of this, right? So it really does come back to structuring things the right way so that you can be set up for success no matter what.
In fact, there's an interesting comment from a gentleman that lives in New York, and he says, anxiety about running out of money in retirement was always a worry and still a worry. Worry is probably spending a lot more time in my brain than it really should, like you just mentioned, right? But I'll tell you, the staggering point in this article was most of us have heard of Morningstar. They're a huge third-party analytical company for stocks and bonds. This statement is staggering to me. This study done in 24 predicted that 45% of Americans will run out of money in retirement. Not maybe. They said they will. That is, I mean, I hope the listeners are thinking about this because that number to me is astronomically high. I was blown away when I saw this. So, this is something that's very, very real, and we've got to figure out a way to make it so that our clients don't have to go through this and the worry can be stopped, right? That's our goal, like you mentioned. We want our clients to feel confident knowing that no matter what happens in the market, they're going to have a successful retirement.
Yeah, there's a couple other quotes from this that I think are really powerful. This one, it says, only 65% of employed Americans polled by Voya Financial are confident of being on track to retire at their target retirement age. Here's another one, and I think this one really hits home when I think of all the folks that we talk to here in the office. It says the Alliance for Lifetime Income found that 47% of retirees said spending money in retirement gives them anxiety. Man, we see that to be the case. I'll tell you what, we have people that come into our office that have been retired for 3 or 4 or 5 years, and they have yet to touch their retirement accounts. Instead, what they've done is they've pared their life down to live just on Social Security or just on their pension because that's the income that they have. And that's what people do, right? I mean, you think about the 40 years that you work before you retire. What do? You live on the income that you have, right? Yep. That's how it works. And so that you're going to do the same thing in retirement because that's what you're used to, and rightfully so. But if you don't find a way to create income from your investments, you're probably not going to. It doesn't ever feel good to call your financial advisor and say, hey, I need 20 grand out of my account. That doesn't feel good, right? It sometimes comes up and sometimes it happens, but it doesn't feel good. Instead, creating regular income is really the key, and we want to make sure we're doing it the right way.
It's important. It's important to have the plan. It's important to have these conversations. So many of you have, and I say this a lot, you've saved well. You've done what you're supposed to be doing. You've put the money away, but now what? You don't have a plan. You're not working with a professional. You don't have that guide to get you down the path. We're going to talk more about that, more about this article. Most boomers and Gen Xers just terrified they're going to run out of money in retirement. That is the number one fear of people headed towards retirement and those that are in retirement, running out of money. Once the paycheck stops, where are you going to generate the income? So, a couple of things we want to tell you about today. The book, Again, love the book. Elevated Financial Management put this out. Casey, Mark, the whole gang, Break the Glass. Now, this is a book that you can put on your bookshelf, and you can do this complimentary. You can go to the website, breaktheglassbook.com, enter your information. They'll ship it out to you. This is complimentary, but it's a nice way to kind of break the glass when it comes to retirement planning, Casey. And you guys felt it was something that you needed a resource to put out there.
Yeah, and you know what? The book talks about exactly what we're discussing right now about running out of money. That is people's biggest concern, and what you can do to avoid it, and what you can do to give yourself the confidence to be able to go spend in retirement. Because that's why you save this money, right? People get caught up in account values, and sometimes they think, well, you know, I've got this $1 million saved, let's say, and that's great. And they're afraid to touch it. And we don't want you to be afraid to touch it. We want you to be confident to go spend it and enjoy it. And so the book discusses that. Again, breaktheglassbook.com. It's a pretty quick read, and it's worth the time.
Yeah, I think there's an important statement in this article, too. It says, anxiety makes it very hard to plan for retirement.
Yeah, I had
right?
that circled too. Yeah, that's huge.
This nervousness is causing some people in their early 60s to claim Social Security rather than wait. Boy, do we see this. And for most that are doing it, if we just think about average life expectancy, with most of our clients are going to hit that, claiming early at 62 is a mistake. You're going to really be giving up close to $200,000 in guaranteed income. So that's a big number. So again, this anxiety, we're helping our clients to quell or, squash that anxiety a little bit so that we can do some true planning and help them to live the type of retirement that they've dreamed and planned for their whole life.
And as the article says, tackle the worry. So there's two points that it says here. Number one, get a financial advisor or meet with the one you have. Amazingly, only 40% of the 55 to 65-year-olds at Nationwide surveyed actually work with an advisor. And the second point, consider purchasing an insurance company annuity for guaranteed monthly income. That can be really valuable going forward, securing that income, the minimum basic needs.
Yeah, that's a really interesting thought, right? There's lots of tools that can be used, and I think it comes back to figuring out what's the right tool for you, and your individual circumstance. That's it. And I appreciate that the article says that because, Steve said the A word, right? If we had a beep button, we'd hit it, right? But that's almost a bad word in the financial world. And we don't really understand why.
I was going to say, should it be a bad word at this point?
Yeah. No, it really can be a valuable tool. And what I'll say is that it's exactly that. It's just a tool, right? It's not the end all be all. It's not the silver bullet to retirement. And sometimes we hear people use it in that way, but that's not the case. The point here is it might be a valuable tool for you, but it's one of many tools that can be used. And so it's about how all these different pieces fit together. Right. And that's the whole idea. That's what creates a plan. That's what we talk about in the book so that you have the confidence to build this plan out and to go spend the money. We talk about, it says here, take action, right? That's what it says in the article. The reason the book is entitled Break the Glass is because when there's a fire, you have to take action. You have to do something, right? And when you're moving towards retirement, that's what it can feel like. It can feel like you're in a fire. There's all these decisions to make, and you don't know what to do first. And the point of the book is it's time to take action. It's time to do something so that you can move towards where you want to be.
Well, and you guys all said it collectively. It comes down to the individual or the couple that's retiring. Everybody's different. When you take Social Security, is an annuity a good fit for your portfolio? You don't know unless you sit and talk about your money and your retirement. Everybody's different. You're going to hear stuff from everybody, from coworkers to family members, but that's not you. Have a customized plan put together. And there's an opportunity right now to get on the calendar with Elevated Financial Management. We've got 10 appointments. Case, walk us through exactly what's going to happen. These are complimentary, no obligation.
Well, what you get on the radio is exactly what you're going to get when you come into the office, right? It's just us. We're going to talk with you. We're going to figure out where you're at and where you'd like to be. So that all starts from an analysis perspective to figure out how you're currently invested, what type of investments have created success for you so far, and is that the same set of investments that's going to keep you successful in retirement, right? That's one of the first questions. Do you have a pension? When should you start Social Security? What are you going to do for Medicare? What about long-term care? We haven't really discussed that today, but that can blow up your plan if you don't have a plan for long-term care. So taxes, right? We have a CPA in-house. So our point here is that all of those concerns, all those things that might derail your hopeful retirement dreams, those are all things we're going to discuss, and we talk about it openly. And again, coming back to what we said at the beginning of the show, it's all about giving you the authority to talk about these types of things and figure out how to be successful so that you can go enjoy your time in retirement. So don't hesitate, pick up the phone, give us a shout.
Yeah, you talk about a de-stressor, leaning into professionals that do this on a daily basis. This is your opportunity. Call right now and get one of our 10 appointments. They're complimentary, 866-668-3625. Again, no obligation to become a client. Great way to test drive Elevated Financial Management. Call the number, secure one of our 10 appointments, 866-668-3625. That's 866-668-3625. When we return on Elevate Your Wealth, it's time to get into some scenarios. We've gathered a handful from around the country. We will throw them at the guys, see what they come up with. That's all next. You're listening to Elevate Your Wealth. Elevate Your Wealth. Your hosts, Mark Stimpson, Casey Elkins, Steve O'Flynn. You can find them in Elevated Financial Management right here in Seattle. 42 plus years combined experience between these three, helping hundreds of their clients get ready for retirement. They're certified financial fiduciaries. I'm Morgan Patrick. Absolute pleasure to jump on here and talk about the importance of just being prepared, having a plan, being proactive when it comes to what is going to be your postgame, your retirement. And we know that so many of you have done this amazing job of accumulating, right? You've put the money away, it's in a retirement vehicle, and you don't have a plan. You're just going to show up at retirement's door, knock on it, and say, hey, whatever I need to withdraw, I'm going to withdraw. But how do you know that money's going to last? We've been talking about that today. Heck, we talk about that every single week. You need to have a plan. You need to work with pros. We're going to give you an opportunity to get on the calendar with said pros. These are complimentary appointments. Stay tuned. We'll open those up. We are in scenario portion of the show. Mark, you're up first. Now, these happen all over the country. We've gathered some. See how the guys would handle it. So the first one, Mark, there's 66 debating whether to take Social Security right now or wait until 70. With around $300K in an IRA savings and modest living expenses, what factors should guide this kind of decision?
Well, what I'm going to say to that is I need some more info, right? There is some things that I would want to know. The one good thing, depending on the year that this person was born, if he is 66, it depends on the year, as to whether he's hit full retirement age or not. So like I was born in 57, so for me, it was 66 and 6 months. If you were born 1960 or later, full retirement age in Social Security is 67. So we need a little more info. I like that he's possibly thinking about waiting till 70, but what I will say to that is most of our clients, we do not wait till 70, especially for someone if all they have is around 300 grand. I don't think they have enough money to probably wait. It's probably going to make a lot of sense to go ahead and go at full retirement age. The one thing that you don't want to make a mistake of here is if you are not full retirement age yet and you do turn on Social Security, you have to worry about what's called the earned income test. And it's a nasty penalty, right? Basically, for every $2 you make over $23,400, they would take back $1 of your Social Security. So it's a 50% penalty, right? So we want to know how this really works in your individual circumstances, because there's a lot to this and you don't want to mess this up.
Right, and part of it comes down. I mean, does this individual have a pension? Right, because that changes the conversation. Is this person working? Right, so I mean, we'd have to kind of make some assumptions there. But I think at the end of the day, most of the time, Mark and I are of the opinion that you shouldn't start your Social Security before your full retirement age unless there's a really great reason to do it, right? And a really great reason is not, well, I think it's a good time, right? Or Jack did at work and he said it worked well for him, right? Those are not really good reasons, right?
I really like that Corvette. Let's do it.
Yeah, exactly, right. Yeah, so there's other factors to consider. $300,000 in savings is that's a modest number around here. That's not a huge number for retirement, right? It's a chunk of change. Don't get me wrong, but when you're looking at that funding a 30-year time frame, even a 20-year time frame, it doesn't go very far in our area. That's the point, right? Yeah. So we're not trying to make light of that figure. That's not the intent. But there's other things to think about, and for our listeners, I think it's really important that as you're thinking about starting your Social Security, sit down and have a conversation about that. If you already have an advisor, go have the conversation with them. That's great. This is not a plug for you to come talk to us and talk about your Social Security. That's not our point. But it is important to talk about, right? And it is important to have the tools to be able to do an analysis to figure out, does it make sense for you to start it now, or does it make sense for you to wait until 70? And can you wait until 70? Maybe you need to start it before that if you don't have enough savings built up. So it is situational. There's no one size fits all. No. And just because it worked well for somebody else doesn't mean it will work well for you. And the opposite of that is true. Just because you had a friend that started Social Security at age X, that doesn't mean it won't work for you at age X because it didn't work for them. So it's really situational. Have the conversation to figure it out.
I think it's really critical that you talk with somebody that really understands and knows Social Security in and out, right? Because I am a nationally certified Social Security advisor. And so you need to, a lot of the big box stores, if you ask a question about Social Security, they're going to go tell you to talk to somebody that knows about Social Security. Same way with taxes. They don't want to deal with taxes. They'll tell you to go talk to your CPA or your tax preparer. If you don't address those things in the planning process, right? Taxes, inflation, Social Security, it can be a huge mistake because you're not getting the service that we believe you need and deserve. So talk with somebody that really understands this stuff.
Yeah, I mean, it starts with the conversation. There's going to be an opportunity to get on their calendar here in just a little bit, and you can have that conversation with Elevated Financial Management. But they say it all the time on the show. If you don't have the conversation with them, have the conversation with somebody that's in this business, understands this business. Again, we are here to help. And speaking of, how about this for a resource? We have a book, Break the Glass, and we have complimentary copies of this book for our listeners. How do you get one? Very simple. Go to this website, breaktheglassbook.com. Easy to remember. breaktheglassbook.com. Enter your information there. They're going to ship you out a book, and it's no cost, no obligation. Case, real quick, just the book itself, I say it's a resource. That's what it is. It's a good thing. It's a nice page turner for people.
It is. Yeah. It's a pretty quick read. Again, it's meant to be something that can be absorbed and applied in your individual circumstance without having to have a conversation with somebody, but chances are it's probably going to lead you to want to talk more, right? And to figure out more about how you can create a plan for yourself. We talk about Social Security in the book, right? That's why this comes up, because we talk about it all the time, and that Social Security claiming age is really important and how it's going to factor in for you. And so that's all discussed in the book. RMDs, taxes, all those questions that you have, they're all built into it. Again, it's breaktheglassbook.com. Quick read. We'd love to send you a copy. For those that are actually going to come in and see us here in the office, we'll give you a copy when you're here in the office too. So by all means, don't hesitate to take advantage of that. We designed it, we wrote it, Mark and myself, specifically for people wanting to educate themselves about retirement.
Yeah, I mean, knowledge is power, right? And there's so many of you out there that have saved well, but you haven't thought about the planning process. This is a great way to get that rolling. That empowerment when it comes to just education about retirement. We don't know what we don't know, right? All right, scenario. The next one is to Casey, and then Mark, jump on this as well. They've got a mix of traditional and Roth IRAs, and their RMDs start next year. Should they start Roth conversions now to lower future taxes, or does it make more sense to let things ride?
The window of opportunity is getting smaller for them, right? If they're starting RMDs next year, Roth conversion, this might be their last opportunity to do it. it's definitely worth something to review, right? Absolutely the case. We are not the folks that say Roth conversion is the greatest thing for everybody. Sometimes it is a great thing for you. Sometimes it's really not all that valuable. So it really is circumstantial, just like Social Security, just like your pension, just like creating income, just like your investments, all those things. It really is based on your individual circumstance. I would say this, if your window, well, realistically, everybody's window for Roth conversion is getting smaller because we're all getting older, right? So as your window is getting smaller, don't hesitate to have the conversation, right? If you've got an advisor, talk with them about it. Ask them, have they considered that for you? If they haven't, my question would be why, right? Because that should be part of your retirement plan. If that's something that your advisor hasn't put together for you, well, then it might be time to think about something else, right? But that being said, a Roth conversion is a very powerful tool. And even if you only converted $30,000 or $40,000 this year, maybe you don't do this massive conversion, but maybe you convert $30,000 or $40,000. That adds up, right? If that grows for the next 20 years tax-free, that could be a big chunk of money that you get to spend later on tax-free. And again, right, it's based on your timing. A Roth conversion is not valuable on day one, right? It takes time for that to be valuable. So the sooner you do it, the chances are the better off you'll be. But it really has to be strategic, right? You can't make this emotional decision of, well, I want to pay the taxes now and be done with it. We don't convert $1 million all at once because that's a bad plan, right? That's really not a plan. That's just an emotional decision. So it has to be part of a larger plan and to make sure that it really is going to create success for you in retirement.
Yeah, because the bottom line is we want to be strategic about it, as you just mentioned, because we will want to stuff certain brackets, right? Now, if you're in a 22, let's say, and we can bump up to a 24, that adds a huge chunk of money if you're married filing jointly to be able to add and only be talking about 2 points, right, from 22 to 24. So that's strategic, and that's last dollar bracket. That's not your marginal rate, right? Your effective, I should say your effective rate. Right. And that's why, if you can get out for 16, 17%, that conversion could be really smart if you have enough runway after the conversion to let it work. So again, we need a lot more information to be successful about this.
It's important. Again, everybody's going to be different. We say this all the time. When we get into the scenario portion, you may hear something on the show that's kind of what you're going through, but it's not exactly what you're going through. So make sure, you're working with a professional, working with a fiduciary. Map out your retirement well before you get there. That's planning, folks. And again, we compliment you on saving and putting the money away, but now what? Have a plan. If you need a second opinion, guess what? We've got an opportunity for you right now. Mark, we've got appointments. There are 10 of them. Walk us through it.
Yeah, so if you've been listening, you're worried about taxes a little bit. We just talked about Roth conversions. Please think about coming into our office. Let our team give you some help, right? We're just going to have a conversation. That's it. We're not deciding to take you on. You're not deciding to take us on. Leave your checkbook at home. Please come into the office. We'll give you a copy of our book and let us help figure out your individual situation so you truly can have a successful retirement like you've always wanted to have.
All right. Opportunity is right now. Call this number, 866-668-3625. That's 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Call our number. Secure one of our 10 appointments. 866-668-3625. One more time, 866-668-3625. Another edition of Elevate Your Wealth is in the books, powered by Elevated Financial Management right here in Seattle. Your hosts are Mark Stimpson, Casey Elkins, and Steve O'Flynn. I'm Morgan Patrick. See you on the radio next week.
Investment advisory services offered through Foundations Investment Advisors, LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in states where it is properly registered or excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. All rights reserved.